Excellent. Well, thank you, everybody, and welcome. Thank you, Amy. And thank you for what you do. I hope everybody had a great summer. This is our first in our fall series, and today's going to be a little bit different. No, this is not your Gatsby standard deep dive, and for those of us who are brand new to government, the Gatsby means Governmental Accounting Standards Board. And no, it's not going to be a single audit or audit update, but we have webinars and write-ups on those all the time. Today's focus is for those who are, again, new to state and local government. And perhaps if you really want to impress somebody, you know, let's say you're sitting around the Thanksgiving table, or maybe afterwards, instead of watching football, play them back, the YouTube video and that we're making today. And, especially around the Thanksgiving table, if they say, hey, government should be just like a business or something similar. I mean, you're going to learn today why that can't be further from the truth. In many ways, we do not understand what is a government and how they operate and what is the financial structure and how are they held accountable. And it's kind of why we're here. Now, this again is the first of two webinars on the basics of state and local governments, as well as a little bit of governmental accounting and auditing. So certainly, I hope you have fun and think about it and think about why we're all here to serve the public. My name is Eric Berman. I am a partner with Eide Bailly in our Boise, Idaho office, and again, I hope you enjoyed today. I'm focusing today's agenda first on how governments differ from for-profit and most not-for-profit entities, except for a few that have compliance audits that are performed. But then the more you look at standards, you may realize that the standards are not all that different from between GASB and FASB, FASB being the Financial Accounting Standards Board, which obviously doesn't apply to non-governmental entities. It's really just a different focus. Now, I'm going to talk about the importance of the budget for a government, and it's really as important as your own personal budget, assuming that you do your own personal budget. And it's, also really important as it either directly or indirectly impacts every single one of us as citizens of the United States. We really are impacted by the budget of our own state and local government. So it's really, really important. I'm going to spend some time this webinar and the next one in October talking about some of the reporting differences that governments have versus other entities and why the accounting standards are different for governments and they should be. Now, again, today will be part basic accounting, part civics, part a little bit of history, history or, learning about how government works, part auditing, part laws and regulations. So there's a little bit of a soup going on over the next hour plus here. So hopefully you'll have more than a few aha moments to talk around the dinner table this evening, and maybe again, as we head off into the fall and head towards Thanksgiving, you might have a few things you say, gee, I never realized that. A bunch of you answered that you're brand new. Some of you may be auditors, and again, you may be in the initial stages of your career, but you are new, perhaps even to a state or local government. And that's probably, again, why we're here, other than the great CPE that we offer from Eide Bailly. And so how are governments different from other organizations? So let's start with the purpose of a government. Now, think of the government where you live and the functions that it provides. I mean, sure, it has a central governance structure. So perhaps a legislative body such as a city council and a mayor. You have a similar structure in a state involving a state legislature and a governor. But think of the administrative functions that a government provides. And in a typical city, You're going to have public protection, meaning police, fire, and other first responders. You have public works, meaning horizontal infrastructure such as streets, and in some cases, water, sewer, and other functions. Transportation, maybe buses, subways, trolleys, and in San Francisco, cable cars. The cable cars are actually part of the city government. In Pittsburgh, where I grew up, they have these things called inclines, or as they call them in other parts of the world, funiculars. Tried doing that after a few beers, and you say a slightly different word. Community development, working in neighborhoods to improve conditions for people. Culture and recreation, maintaining parks, playgrounds, staffing in summer camps and pools. You may have an airport in your area. Now, airports are governments, and if you live along a major river or a place with a harbor, you have a port, and ports are major. Are major facilities, and they are also governments. In some cases, providing public utilities such as power, water, sewer, and even internet service. We have a bunch of governments nationwide that provide internet. Of course, providing not only early education, but also grade school, high school, and even colleges and universities. And in many places, providing a hospital or even managing health insurance or providing disaster insurance, especially in an earthquake, hurricane, or flood prone areas. In none of those instances is the government involved in creating wealth or maintaining a net position to provide some service without a profit, such as many not-for-profits do. Sure, many colleges, universities, and hospitals and cultural centers are not-for-profits, but they are usually a singular purpose involving education. Now, the purpose of government is to enhance or maintain the well-being of where we live. In most cases, we elect representatives to formulate policy, laws, regulations, and so on to achieve public policy goals. That's why the phrase public servant is used. For-profit entities have nothing to do with such activities. The primary goal of a for-profit organization is to create and maintain wealth, or else the for-profit organization no longer exists, period. They are there to create wealth. That's it. You know, an oil company is not in the business of being altruistic for the people who buy their gasoline. They're there to create wealth, period. So when you hear the phrase government ought to be run like a business or something synonymous like that, and you may hear that, again around your dinner table, the person who says it doesn't understand the importance of working in a government or working with a government in nearly everything you do. Guess what, folks? Every single one of us on this webinar is our government. Every single one of us. Think about that for a few seconds. It is why when I was deputy controller for a state, I used to say to my team, think like a taxpayer, because guess what? You are one. I still say that as it's true every single day. And guess what, folks? If you think like a taxpayer, you realize, gee, maybe we're making some of the wrong decisions, or maybe we are making the right decisions. It's really up to all of us collectively. Due to the breadth and scope of most governments, there is a broader stakeholder base, the taxpayers, the fare payers, ratepayers, citizens. Those groups provide oversight, and ultimately the ballot box is our prime oversight. Revenue is mostly from what we call non-exchange transactions. Taxes have a force of law behind them. And if you do not pay a tax that is rightfully due, chances are you get a little letter in the mail saying, hey, wait a second, we want to have a chat with you. And and usually it's not a very comfortable chat if you're not paying your taxes. But there are other sources of revenue. Again, there are fares to ride a bus or a train, rates to utilities, tuition, and so on. Now, contrast that with for-profit entities. For-profit entities, they rely on sales. Not-for-profit entities, they rely on donations from donors, as well as funds from governments in the form of grants in some cases. Now, I'll talk about the aspect of non-exchange transactions a little bit more in the next webinar coming up in October. But just remember that phrase as it's going to occur over and over and over again during your career, as long as you work with governments. Accountability ultimately rests with you, meaning the voters, and it's monitored by the folks we elect. Accountability, that is really the cornerstone of a lot of government operations. This is different than for-profit entities. Accountability for a for-profit entity rests with the owner or owners, which are stockholders. If a stockholder is not happy with a for-profit, guess what? They log into their brokerage and they sell the stock. Period. That's it. That's the ultimate accountability. Finally, we're going to talk about the 10th Amendment to the Constitution and why it's so important. To give you a hint, it sets up the hierarchy of government in the United States. So by now, you should be seeing a lot of those differences between a for-profit entity and a not-for-profit entity in the government. One of the major differences is this thing, again, we call budget. It's not only a policy statement, it's not only a wish list, but an enacted budget by a legislative body and approved by our chief executive. It's got a force of law. That budget is among the most scrutinized and debated documents issued by a government on a regular basis. It also is the foundation of a large amount of our government's financial reports. Another difference is that a government has expenditures, which are different than expenses. Expenditures drive many forms of revenue, in fact, and it's almost like a reverse, where you have to have expenditures to generate revenue. In other words, a government may have to do something, have an outflow of resources to obtain resources and reimbursement from another government. And that is the essence of how the exchange of funds occur in many grants. The revenue received by a government is not related to a single good or service. Now think about it, your property taxes, your sales taxes, your income taxes, if you're in an area that has income taxes or sales taxes, it funds a lot of services in your government. And this is different than a business. The revenue in a business is directly related to the goods or services provided. Now, governments have capital assets that, just like a business, but those capital assets are not primarily for the purpose of sales or other revenues. Now, sure, there are governments that own stadiums or other business type venues, but those stadiums and other business type venues are not busy 365 days a year, just like a gas station or a casino might be. The focus of a government's financial operation is on this concept that we're going to hit time and again. It's called interperiod equity. And I'm going to go through this a little bit in more detail, not only later this afternoon, but certainly in our next webinar. A government's assets may be restricted also by another level of government. It may also be restricted by the law, by donors, by contract, or even a court case. And that's almost unheard of in a business. Now, not-for-profits may have restrictions on assets from donors, though. You see that all the time. Now, there are 90,000 governments in the United States. Each one of these governments is slightly different, but most use a common set of accounting and financial reporting principles. These are not rules, they're principles, meaning there's a bunch of wiggle room or in professional judgment in them. The differences derive slightly diverse types of accounting and financial reporting. Now, one of the downsides of governmental accounting and financial reporting is the lack of focus of many managers on things other than the next election. In only a handful of cases do decision makers really consider the impact of a decision on the long term. Now, sure, we would love to have exceptionally low taxes or no taxes at all until a government cannot afford to pay for an essential services such as public safety, education, public health, and so on. We'd love to have everything for free. And in fact, in one state that I actually live near, very near, there's a movement called Free Staters. That's all well and good, and that's great until you actually have a problem, until you actually have a public safety or a public health issue, or God forbid, a natural disaster. All these elements mean that government stakeholders are broad, starting with the citizens. Remember that word, accountability. Now, lots of entities are interested in government and trying to translate a government's decisions into positives or negatives based on groups and constituents. That is why a government's reports are so important, yet only a handful of us read them. And if I were in a room live, I would ask a show of hands on how many of you read the Citizen's Guide to the Annual Financial Report of the United States. I bet you didn't realize that there's about a 20-page document full of pictures and charts and graphs that talks about the finances of your country. And it's vital for us as citizens to really read it, and it's available for free on the US Treasury's website. It's a great read for every taxpayer and would only take you maybe about a half an hour on a rainy or snowy day. And again, it's free. Yet I bet not one hand goes up. Remember, folks, again, it's your money. Think like a taxpayer because you are one. So, what is this thing in this concept of interperiod equity? Those of us who are baby boomers, including me, we're reflecting on that concept a lot. The concept focuses on whether the revenues of today are sufficient to pay for the programs and services of today. Now, currently, right now, I'm in Washington, D.C., and I'm about 2 miles away from Capitol Hill. And there are a bunch of folks on Capitol Hill who think about that a lot. Gee, what do we do with the federal deficit? And that all that is interperiod equity. The concept focuses again on, gee, do we have enough revenue coming in today to pay for the programs and services of today? And whenever you have a deficit, those numbers aren't equaling. When those programs and services exceed the revenue generated, a deficit occurs. Of course, the opposite may occur, but a lot of us focus on a government's deficit. And again, that's why interperiod equity is vital. Again, after all, I'm a granddad. What are we handing to our next generation and the generation after that? Are we shifting the burden of deficits to my kids and my grandchild's generation? Currently, the answer is obvious. The answer, unfortunately, is no. After all, my baby boomer generation, we've been living the high life for a while. Now, fear not, states and local governments, other than the federal government, they have varying definitions of what's called a balanced budget. Now, some states only count a few major operations or funds, and we'll talk about funds more in detail in October, while other state and local governments encompass all operations in this calculation. Now, the law decides on what is balanced and what is not for interperiod equity. Now, before you ask questions in the chat, let's not go down the rabbit hole of the federal deficit. There are a lot of folks within 50 miles of where I'm sitting here in Washington, D.C., who think every single day on the federal deficit, and that's fine. The federal government does not have a balanced budget amendment, though it's tried to in the past many times. Yes, the federal government has a balance sheet of sorts, but it's incomplete. After all, the Departments of Defense and Homeland Security, the Department of Defense is in that big building called the Pentagon, and it's about a mile and a half south of where I'm at. And Homeland Security is actually right up the hill from where I'm sitting. If they told you where all the assets are, they might have to have a chat with you for national security reasons. And so they don't like to tell anybody, including auditors, where all the assets are. So by now, you're seeing that indeed a government is different from your gas station. Citizens and debt holders are the true shareholders in contrast with the owner or group of owners of that gas station. Now, due to the ability to tax and the force of law, governments don't go out of business all that often. Now, one of the oldest governments in the world is the city of San Juan, Puerto Rico. It has just celebrated its 500th anniversary. Now, that's a picture of City Hall. No, I did not take that, although I was in San Juan oh gosh, maybe about 4 years ago. And it really is a nice city, especially the old part of that city. Now, Now, that was established about over 500 years ago. St. Augustine, Florida was established about 40 years later. In the city of Santa Fe, for those of you in New Mexico, that was established about 90 years later. So the city of San Juan, that's pretty darn old. And again, that's the oldest ongoing government, at least in the Western Hemisphere. Now, it's San Juan is relatively new in comparison to other governments outside the Western Hemisphere. The oldest governments still in operation are likely China. It was established, as far as records go back, about 2000 BC. And it's still a functioning government. No matter what you say about China, it is a government. Greece was about 1,000 years later, and Athens and Rome about 250 years after the establishment of Greece. Japan was established about 600 BC. Now, think about that. All those governments are still around, but the gas station up the street maybe's been around for a few years. The not for profit may be, you may be working with maybe a few years more, but not 5 centuries or 10 centuries or 20 centuries. Hasn't been around for that long. And so that's why governments have to be different. Now, general purpose governments are involved with many services and programs. There are special purpose governments out there that are legally separate from other general purpose governments. Those usually are involved with services like not for profits, business enterprises, airports, transit, ports, utilities, colleges and universities, hospitals. There may be special purpose governments, or all of those may be part of larger general purpose governments. Now, for those of you who are auditors on the webinar, it is said that the first audit took place in about the 1300s. It turns out that a toll taker was working a bridge in England and stealing funds from the citizens of the area. Yes, governments have always led the way, including in auditing, and this is usually due to fraud. Modern auditing for businesses really didn't start until about the 1840s, also in England, in order to protect shareholders. Now, auditing and taxation were not uniform in the United States until about a century ago, but they really came into being with the federal securities laws back in the 1930s as part of the Great Depression. The first accounting research bulletins that mentioned governments were in about 1937 and 1938. And the first standard accounting and auditing practice announcement was issued by the AICPA in 1939. And I'll talk about the standard setting process a little bit later in the webinar, but that just gives you a sense of how old some things are. So to recap some of the concepts, government is a collection of programs and services that are authorized by a legislative body in a budget, a law, regulation, ordinance, or some other legal means. Now, to fund those programs and services, the government authorizes the raising of some form of revenue, which is taxes, fees, fines, or something else. Or sometimes there is a subsidy from another government. In other words, one government may pass funds over to another government, and they may be in the form of federal grants either directly to the government or passing through another government to a government. And then there's this notion of accountability. And again, accountability is not only at the ballot box, but also in the audit of a government and monitoring by a higher level of government in exchange for revenue. Again, the budget's a key control mechanism on spending, and it usually establishes funds and programs and services for a period which may be 1 or 2 years. For capital budgets, they may last longer due to the nature of construction. And if a manager does not follow the budget or perhaps overspends, the manager may be held accountable by either termination or, in some extreme cases, by legal consequences. The budget may also dictate what a government can and cannot do, and in terms of policy and procedure. So the budget is really a serious document in ways that other organizations may or may not have. So to recap, governments are not established to make money. There's no profit motive. And in fact, you may get upset if a government makes money. That means that if you've charged too much in taxes or did not have enough services, you might have a problem. And that's kind of what's happening now. State governments have a large amount of cash. In one instance, where I was a former preparer, there's a provision which was modernized in 1986, but it kind of stems all the way back to the 1780s that requires the returning of excess revenues back to the citizens. And that returning of excess revenues back to the citizens is in the billions of dollars. Kind of sounds like a dividend in a for-profit business, but it's really not. It's just our tax money being returned. Now, remember, again, governments are primarily funded through these non-exchange transactions, and not-for-profit entities rely on donors. And accountability is to those donors, and the governing board is usually made up of those donors and other stakeholders. Now, yeah, not-for-profits receive grants and so on, but they're usually a singular purpose rather than a government, which is more generalized. Further, a not-for-profit has if the not-for-profit has an ancillary operation, such as a retail store in a college or university, the not-for-profit may actually be subject to federal income tax. But governments are really not subject to taxation. Okay, so now how are some of these activities, including audits, performed? So let's take a little bit of a stroll down some of those differences. Now, due to these differences, we as auditors and sometimes as preparers, we must consider three sets of guidance. Of course, we still adhere as auditors to generally accepted auditing standards or GAAS from the ACPA. Now, that's our baseline. That's a given. But building on that is what's called government auditing standards issued by the United States General Accountability Office, or GAO. The standards are termed GAGAS, or some people say I'm gagging on GAGAS. Now, to some, GAO is the gold standard of audit organizations because GAO is really accountable to Congress. But the head of GAO is apolitical and serves a term that doesn't align to the president or to any political party. For federal grants, there's a federal law that we'll talk about called the Single Audit Act. And any entity that spends funds over $750,000 in any year is subject to a single audit, absent any other guidance to the contrary, perhaps in the contract. It's a law, by the way, because it's codified in federal regulations. The guidance is updated and it's known as the Uniform Administrative Requirements, Cost Principles, and Audit Guidance for Federal Awards. We just shorten this thing to the Uniform Guidance. Now, the application of these three sets of guidance differs depending on facts and circumstances. Of course, GAAS applies where you're engaged to have an audit, but you might not be engaged to have an audit. And if an entity does not engage in an audit, the attestation standards may apply, meaning reviews or compilations or whatever. It really depends on facts and circumstances. If federal awards are less than $750,000, then only the audit standards apply if an audit occurs. If the auditor is engaged to perform an audit in accordance with GAGAS, for either a government or in some cases not-for-profit, or in very few cases a for-profit entity with government contracts, then the GAO standards apply unless the federal funds are more than $750,000. If the federal awards are more than $750,000, then all the standards apply, including the single audit. Now, the easiest way to think about the audit guidance is in a pyramid. Since the single audit is a law, and if it's applicable, then it's got to be performed. And annually, there's a supplement that's issued through the White House Office of Management and Budget, but it's generated from all the federal agencies that issue grants. And it's called this thing called the Compliance Supplement. And the supplement compiles a list of compliance requirements for federal awards based on risk, as well as the terms and conditions of federal grants. And many grants have common terms and conditions, and therefore the audit and reporting these grants are known as clusters. Now, by aggregating all those activities and taking a step back, guess what? All the auditors on the webinar, you're performing a compliance audit, not just of your auditee, but you're performing a compliance audit of the United States of America. That's where the reporting on all these activities end up. Now, think about that for a second, because you're a taxpayer and you're auditing the United States of America, and your tax money is going to the federal government as well as your state and local governments. Think about that for a second. That's why what we're doing is so important. Due to the differing scope, there are different elements in each audit, and I'm going to go through these more detail over, in the next webinar in October. But keep this one handy, especially for the auditors in the webinar. Now, due to these issues, different reports are issued as well from the auditor. And again, we'll talk about these more in detail coming up in October. So let's talk a few moments about compliance. Since we're working with a law, it's almost like a switch, either yes or no. Either one is complying or one is not. Think about that. If the law states that the speed limit is 25 and a traffic camera captures you going 40, you're not in compliance. And guess what, folks? You're going to get a ticket. You pay your fine, or you can contest it before a judge, and you may win or lose. And a compliance audit and the single audit is pretty much the same thing. And that's really all it is. That means the materiality threshold must be in accordance with the law. Now, back to our speeding ticket. Technically, you're speeding if you're going 26, but many jurisdictions allow some wiggle room. But again, I'm sitting in Washington, D.C., and there's a whole underground chat room that goes on that shows where the traffic cameras are and where the speed traps are. And everybody who lives within the district knows where all those speed traps are, because they change every single month. You can just actually open up a few apps and you can see. And there's one about 100 yards south of where I'm sitting right now. Just to give you a heads up, when you're driving in Washington, D.C., be careful. You either comply or you do not. And therefore, there are more stringent audit provisions, just like in a compliance audit. Now, governments also engage in special types of audits called three-party audits. Now, that's not heard of in for-profits and not-for-profits. A three-party audit is where an oversight body, such as a state auditor, engages an independent auditor to perform a piece of a larger audit, and that is common. And finally, we have some common terms that we have to deal with. We all know the words must and should in the Code of Professional Conduct, those of us who are CPAs. But given the force of law, the word must really means no wiggle room. And again, we're going to talk about this in a little bit as well as in the next webinar. So again, I talked a little bit before the polling question about must and should, and the word should. Print this out. You may want to stick it to your cubicle wall, because if you're a preparer and if you have an auditor saying you must do this, or you should do this, or you should consider this, think about that. This is what they are saying. Look at the differences and where something is mandatory or required and where a word is undefined. Okay, so based on that, why are audits different? And it again involves that one word, accountability. Each program, service, activity, fund of a government has some form of accountability to some entity, or ultimately to all of us who are citizens, meaning not only all of you, but me. Due to this word, the auditor's report to a government is going to be different. And again, for those who are preparers, your report is going to be different than, say, your gas station. It's structured on this concept called opinion units. Fundamentally, separate audits occur for the core governmental activities of a government, activities where government operates like a not-for-profit or a business, in entities related to a government but legally separate. And then we have some immaterial activities in the aggregate. And I'm going to get into this a little bit more in just a bit. In essence, more than one set of financial statements is included in a government. Now, think about our gas station. If the owner of a gas station has a set of financial statements, assuming they prepare more than just a tax return, a balance sheet, an income statement, and a statement of cash flows is produced, and maybe some notes. And in some cases, the gas station is audited. Governments are different due to these opinion units. Multiple statements of net position, statements of activities, and in some cases, statements of cash flows are generated. And in some cases, audits are performed by multiple auditors, especially in the case of states. Remember, I mentioned these three-party audits a few minutes ago. There are many more group audits in governments than there are for not-for-profits. For-profit entities may have a group audit if they have international operations or a conglomerate, but our gas station usually is not part of a conglomerate. Materiality is based on each opinion unit, excluding other opinion units. Now, in many governments, there may be 4 or 5 materiality calculations or more. So for those of you who are preparers out there, you may ask, hey, your auditor, hey, what's my materiality? Well, they may have multiple answers for you. And it's because these are based on opinion units. There's no combining that goes on. So you can see this makes our governmental audits fun. So due to these differences, let's talk about the differences in reporting. And these differences, again, involve differences in auditing, differences in laws, regulations. And because of that, and this focus on accountability and the basic operations of governments being different than for-profits and not-for-profits, we got to have slightly different standards. Now, remember the buzzwords I already talked about, programs, services, accountability, budget. Funding those activities are what are called involuntary or non-exchange revenues from taxes, fees, and fines. And the budget is the key control on spending, programs, and services. And finally, governments and their personnel, they need to adhere to these written laws and regulations. The laws and regulations govern what can and cannot be done. And when we go astray from those laws and regulations, we got this thing called the court system. And the court system adjudicates when the law or regulation is either unclear or unfair or unjust. But there's more to this aspect. If you think about a major federal law, such as the American Rescue Plan Act I mentioned, those provisions are going to be in place until December 31st of 2026. And that is more than 1 year. A major road project may take years to build. Now, that's a lot longer than a sale of groceries bought this morning from a wholesaler. A budget as a force of law, and violating that budget may have consequences. Now, the government may have capital assets that are decades old. Where I'm currently living, I live on a street that actually, if you go out my door and you hang a right and head north, that road went to Gettysburg, Pennsylvania. And the troops marched north of there to go fight in 1863. Of course, there are roads and canals in the United States that are even older. Governments issue debt to fund capital assets. There's no such thing as stock sales. And finally, one thing that so many people miss when they think about a government, they think about just consider how huge a government is. In many areas, a government is the biggest employer. In the United States, by some measures, the government is the biggest portion of our GDP. So just think about that, in terms of how much government means to all of us. Given the differences, the focus on accountability versus profit and surplus, the financial statements have to be different. There are multiple focuses and bases of accounting in a state or local government. Financial statements, as some programs and services, they kind of operate like a not-for-profit or business. And in some cases, we have these things called utilities. And, say your power, water, sewer, they can be part of your government. But there's that annoying budget document again, which requires supplementary reporting. Given that the budget has a legal basis in the government, a reconciliation to what is in GAAP is currently required. In other organizations, the budget does not have a force of law, and therefore no recognition or reconciliation is required. Now, I'm going to talk about the reporting entity in a little bit, but for many governments, the reporting entity may be vast, especially in states and frankly, the federal government. Now, contrast that with a typical for-profit or not-for-profit. Again, conglomerates with global operations, they may even have simpler reporting entities than a large state such as New York or California. Finally, many governments have fiduciary activities which are reported due to accountability. Now, our webinars over the past few years talking about GASB 84 fiduciary activities, we're not going to go down that rabbit hole again. But if you really want to learn about fiduciary activities, you can always look at those webinars on YouTube. And again, take a look, or again, join us next month to take a little bit deeper dive. But I'm not even going to, go down the road of that as of now. Now, due to these differences in activities, we have different but related standard setters. The Governmental Accounting Standards Board, or GASB, has been around since 1984, but few people realize that it's all part of this same physical structure contained in an umbrella not-for-profit foundation called the Financial Accounting Foundation, or the FAF. Now, the FAF has been celebrating its 50th anniversary. And the FAF provides the funding mechanism for not only the GASB, but also the Financial Accounting Standards Board, or FASB. Now, amazingly, both the FASB and the GASB share this office building space in Norwalk, Connecticut. Now, by the way, the board is going to be moving down the street from this building later on this month because they've outgrown it. The FASB was born in 1973, assuming operations from former boards. The pronouncements issued in the 1970s by the FASB had some applicability to governments, but the AICPA did not fully recognize those elements. Now, a predecessor board to the GASB was established in 1979 by a group of stakeholder entities. Now, even though it only lasted about 4 years, some of those pronouncements are still in use today. And actually, I had a call from a client earlier this morning, and I had to go back to that former predecessor board's pronouncement, and I pulled it up. That was their statement number 1 that was issued in March of 1979. And I said, this is still in effect, and here's the answer. And there it was, and it hasn't changed since 1979. So remember, governmental accounting, financial reporting, and auditing, it's been around much longer than the 20th century. And I talked to you about the toll bridge, back in England from the 13th century. Now, bookkeeping needed to occur for those tolls back in the 13th century because double entry accounting did not exist for about another 150 years. And it was invented in Venice. After the Revolutionary War and, in the 1700s, the Continental Congress approved pensions for returning soldiers. The records were kept in Philadelphia and carried actually physically by General Washington as he moved back and forth. And for those of you who are here in Washington, D.C., if you go down to Mount Vernon, you can see some of those records. The Civil War brought a need for a general currency. And oh, by the way, those are copies. The records are obviously in the National Archives. The Civil War brought a need for a general currency. The first greenbacks, and they literally were green, were issued by the United States Treasury to fund the war. Now, prior to the war, cities such as New York City wanted a form of reporting to the city council. And New York City is generally believed to have the oldest governmental financial reporting. But when I was deputy controller of Massachusetts, I had bound annual financial reports in my office dating back to 1868. Now, the reports look really a lot like what we present today. Now, they weren't full accrual accounting until about 20 years ago. But they had a balance sheet and they had an income statement, kind of like what we do today. And again, we're talking 3 years after the Civil War. Standards, though, didn't appear until the early 20th century, and again, largely an outgrowth of practices in New York and Chicago. Now, the there are a lot of these practices that needed to be put together due to the belief that fraud was rampant in commercial accounting. And of course, we were also dealing with the stock market crash that occurred in the 1920s. So, heading on to that, as a result of the crash and the books issued in the 1920s that formed the foundation of modern governmental accounting, local governments formed what's called the Municipal Finance Officers Association, and then the National Committee on Municipal Accounting to develop the standards of reporting. Now, you may recognize the last three letters. The MFOA is the forerunner of today's GFOA, and the NCMA is the forerunner of what we know today as the GASB. Now, many preparers use these things called the GFOA's Governmental Accounting, Auditing, and Financial Reporting Blue Book, which is known colloquially as the Blue Book. Or you may use the CCH Governmental GAAP Guide and the Governmental GAAP Practice and Disclosure Manual, which is written by me, to assist in preparing reports. However, these guides are not authoritative, even though they're widely used. Now, the Blue Book was originally published by the MFOA way long time ago. The National Committee on Municipal Accounting morphed into the National Council of Governmental Accounting, which in 1984 became the GASB. During the next 5 years, negotiations occurred between the GASB and all their major stakeholder organizations, including the AICPA, as to what the GASB's authority would be. And a major agreement was signed on 1989, splitting the GASB from the FASB and elevating the status of for an audit to a standard setter. In essence, the GASB was accepted by the AICPA. All the existing standards by the AICPA and the FASB that were applicable to governments, they were frozen as of November 30th, 1989, meaning before then, is all codified within GASB standards. After that, FASB standards don't exist for GASB. And so that 1989 date is a real inflection point. Now, you may ask, well, that's for state and local governments. Does the federal government use GASB standards? No, they have their own board comprised of federal agencies, CFOs, and non-federal practitioners, and they're called the Federal Accounting Standards Board, or FASAB. It is also a standard setter. Financial statements are issued by the U.S. Treasury based on guidance from OMB and guidance from Congress. And the GAO audits the federal government. They do issue a full set of accrual-based financial statements. And again, these reports are freely available, and I encourage you to go see them if you have nothing better to do. So let's dig a little bit deeper into the budget that I've been emphasizing. And again, I can't emphasize enough the importance of a budget. And again, as the auditors on the webinar, they're going to focus on whether or not you've complied with laws and regulations. And I've talked about this force of law. And in many cases, you may see a news report, say, on social media or something talking about a budget overrun. And that's why there's this huge focus on that. And I talked about balanced budgets and so on. Now, in some governments, there are limits on raising revenues or even on spending. And there may be a constitution of a state that may have been passed that requires a balanced budget. Now, the vote relating to a budget is called a referendum. Many governments tally the budget into line items called appropriations. Each has a spending limit for the program or service. And many government executives can veto individual line items as part of the passage of a budget. However, that veto may be overridden by a legislative body. Now, some governments may further delineate the line item appropriations into allotments, which not only control spending at the appropriation level, but also control spending by month, quarter, and so on. And it can be changed if revenues fall short of expectations. Now, if you're wondering, does the federal government have such limits? Sure, they do use appropriations. However, the president does not have a line item veto authority. Now, some have suggested that this may improve the federal government's financials, but others have doubted it. To have such authority, a constitutional change may be required. Now, remember, the budget is a set of priorities, limits, and it may establish structures, programs, statutes, laws, regulations. The budget development process may or may not be open to the public. No matter what level of government, the process is almost always the same. The executive proposes the budget, the legislative body debates it, and the legislative body approves it and sends it back to the executive. And then you have the process where you could have a veto or not. And once the budget's approved, the government administrators establish appropriate revenue budgets and appropriations. In most modern accounting systems, they can record all these details. Others may be manually driven or somewhere in between. Now, due to these differences in governments and differences in the level of governments, one of the cornerstones of financial reporting suffers. It's called comparability. And you know that one gas station can pretty much compare to another gas station. But that's really not the case in a lot of governments. There's no set standard on the budget, despite the focus on the budget. The GASB, the FASB, and even the federal government have no legal authority to set budget standards. The GFOA and other organizations have best practices in budgeting, but again, they're not authoritative. And we also have many different types of budgets. And again, capital budgets can last longer than one cycle. And budgets can be cut mid-cycle if revenues don't meet expectations or spending is above expectations. Now, finally, I mentioned the definitions of a balanced budget. Budgets may not include all programs, services, assets, or liabilities. And the most common budgets are based on cash in, cash out, or some form of modification of cash in, cash out. The bottom line is that budgets only have so much they can do. Now, due to these issues, reporting is different between governments and other organizations. The first step is to understand these differences and understand what a government is. And this is going to be the civics level of our presentation today. Why are things different? And in some cases, deciding what a government is may be a little bit harder than you think. The AICPA describes a government in the first paragraph to the Audit and Accounting Guide, State and Local Governments. Governments may have just one or more of the following characteristics. You got to have a popular election of officers or appointment of a controlling majority of your governing body by officials of one or more state or local governments, or you have the potential for unilateral dissolution by a government with all the net assets of that organization going back to a government, or you have the power to enact and enforce a tax levy. Entities are presumed to be government if they can issue debt that pays interest that is exempt from federal taxation. However, organizations possessing only that ability to issue tax-exempt debt and none of the other governmental characteristics may not be a government at all, unless their determination is supported by some other evidence. As you can see, it's not so easy to figure out what a government is and what it's not. Modern government, again, dates to ancient Greece and Rome and China and Japan. But in the Americas, we look upon our founding fathers. The adopted concept called the social contract, which was part of a post-Renaissance thought process in Europe, began with the issuance of the Magna Carta back in 2015. And people were tired of kings living lavishly. And I know some of us have it in our corner screen looking at the Queen lying in state, and that's fine. But a bunch of people were tired of kings living lavishly while the rest of the population were barely surviving. The social contract established what the government it should be. The government is created by the people, for the people. And it was the foundation of the early colonies of the United States. And it was carried to us by our founding fathers, Franklin, Jefferson, and so many others. The early colonies in America established written governing documents, including in Jamestown and the Plymouth colony, John Adams in Massachusetts, George Mason in Virginia. They took these founding documents in Jamestown and in Plymouth and modernized these in the 1770s. And guess what, folks? They're still in use by Massachusetts and Virginia, written by John Adams and George Mason. It's almost word for word the same thing from the 1770s. And guess what? The federal Constitution was based on those two documents. The contracts created today, they created co-equal branches of government, citizens' rights, and in other elements, accountability. Again, also those two documents in Massachusetts and Virginia, they established the word Commonwealth and the word Commonwealth is used in a few other states as well, but we're not really states. The difference is the organizational structure. In those cases, if surpluses again get above a threshold, the surplus is returned to the citizens just like a partnership. In some cases, people view the ultimate form of government to be where you see on this screen. I'm from New England, and in New England, we have this body called town meeting. Unless your town gets too big and elects a mayor or a city council, town meeting is open to anybody. And if a vote on a budget happens, if you approve, you stand up and you are counted. And that's what we do in my town. If you are against it, you sit down. On the left-hand side, this is a painting from Norman Rockwell, and I had a copy of it in my office when I worked in government. Notice the gentleman. He's standing and stating his case. The town meeting agenda is in his left-hand pocket. It looks like the meeting's in a schoolroom because of the blackboard behind him, which is often the case. He's not dressed in a suit, and that means a lot. And it's true of many town meetings. Anyone can say anything. And notice the suits are all listening to what he has to say. Now, notice the picture on the right. That is the largest elected body in America. That is the state of New Hampshire General Court. Think of the size of that state and then consider the amount of people in this room. There are 400 members in the General Court, which is really the legislature, 400. Now talk about accountability. Guess what, folks? They're only paid $100 a year. That's it. That's in their constitution. It will never be changed. They're paid $100 to be part of the state legislature. Now think about that when you consider other legislative bodies. The 10th Amendment to the Constitution establishes multiple levels of government in the United States. Now to some, this one sentence is the most important in the entire document and the most fought over in many, many Supreme Court cases. And you can see in your mind's eye what those cases are. The words have never been amended. It's my opinion that a close second are these three magic words: we the people. We have one federal government, we have 50 states and additional territories and tribal nations, and then we have over 90,000 other governments. These magic 28 words in the light green box were written by James Madison and George Mason, and they almost come directly from the Magna Carta from 1215. They established the concept of accountability and what powers go to which level, or as colloquially called, states' rights. And whenever you hear somebody in the media saying about states' rights or some politician, they're referring back to that green box. Now, given the differences in the levels and the diversity of governments, audits are different. The composition of government forms that accountability and that reporting entity. And this reporting entity is again, what we're going to focus on if you're an auditor, and this legal separation. And again, these practices, procedures, budgets, compliance, and so on. It's almost like a puzzle that goes on. Now, like our audits, the financial reporting entity is a pyramid. The base is all the organizations that are accountable to the primary government as determined by the primary government. And the primary government's the top level. That usually is a state or a city or something like that. That is the top level. The base is all those other organizations. Accountability is based on the criterion GAAP, both financial and non-financial. They can issue their own reports and have separate audits. The next level is based on financial accountability, and the top level is the primary government, which is the oversight by citizens. And remember those pictures of town meeting in New Hampshire. The levels below the primary government are known as component units, as these are components of the top level of the primary government. Now, given the pyramid, the structure of an annual financial report is a bit different. Annual financial reports, or AFRs, are a vital piece of accountability if they're read. Now, too many potential users of an AFR only read the auditor's report, count the paragraphs and figure, gee, I see 3 paragraphs. Things must be okay. But those folks are having issues lately because the auditor's reports have changed. All these groups should be reading the AFR. The AFRs are prepared in accordance with GAAP in most cases, but others are not. They're prepared in some form of special purpose framework, either required by law or regulation, or there's some statute that allows flexibility in implementing GAAP. These special purpose frameworks may be in place for regulated governments or for small governments where the cost of implementing GAAP far exceeds the benefit, especially if those governments do not have outstanding debt. But for those of you who are preparers out there, understand what the law says before you say, hey, wait a second, I don't have to prepare an annual financial report. Follow what it says in law, regulation, or maybe a debt issuance. As I mentioned before, the GASB issues GAAP for states and local governments. It's accepted by the AICPA's Code of Professional Conduct as the GAAP standard setter. GASB has issued a conceptual framework, which is the underlying skeleton of standards. The first concept statement that was issued by the GASB was nearly 40 years ago. And guess what, folks? It focused on the word accountability. And the second piece it focused on was financial reporting. Now, if you look at the pillars of accountability in the left-hand column and why in the right-hand column, the first piece, that is the concept of interperiod equity that I talk about. Are we kicking the can down the road to the next generation? Now, keep this one handy as it helps you make decisions about presentation and disclosure within your AFR. The third concept statement from the GASB establishes the interrelationships between reporting and types of reporting. And again, it's not only to assess accountability, but due to risk assessment and other factors, it also establishes how we're going to allocate our precious tax dollars. What are we going to do for our investments? What are our procedures and other decisions that are being made? That all forms some form of reporting. Now, many of us focus on the green boxes in the lower left, the basic financial statements. Those are our, colloquially, those are our statement of net position, our statement of activities, our fund statements, which we'll talk about next month, and all the other requirements, including a management's discussion analysis and note disclosure required supplementary information. But GAAP requires this supplementary information, so we're over in the second green box. In certain types of reports, other supplementary information is presented that is not required for an AFR. And again, that's in that second green box. There are other general purpose external financial reports that are presented by governments. And in some cases, our government present what's called a popular report or a citizen-centric report. And that is the light blue box. And that's meant for ordinary citizens to understand what's going on. And those are great. Beyond the general purpose external financial reports, there are specialized reports on budgets, grants, bond transactions, and other types of reporting. Now, this is really the spectrum of financial reporting, but there's more to accountability than that. This other information includes things that are becoming really popular these days. Many governments are initiating open checkbooks and transparency websites, and these are awesome tools. Even some of the smallest governments we deal with have open checkbooks and transparency websites. Reporting to federal websites required by the American Rescue Plan, that's accountability. There's even investor-focused websites, even the core website of your government. That is accountability based. To some, this information in the blue box all the way over to the right, it's more important than financial reporting. But guess what, folks? It's not audited. I mentioned some jargon. The basic financial statements are contained in AFRs, and the additional information may be presented, including an introductory level letter, supplementary information, combining information, as well as statistical information on your government. Those are part of what's called an annual comprehensive financial report, or an ACFR. ACFRs are not required by GAAP, but there is GAAP for such reports if they are presented. However, some state and local governments require ACFRs. So again, go with what the law says. Each of these reports have some basic assertion of reporting. They must be understandable, reliable, contain relevant information, and one that's kind of hard these days, they must be timely, especially if we're working remotely and so on. Finally, they must be consistent from one period to the next, or if changed or adjusted to reflect that change, just like a for-profit or not-for-profit business. If to be in accordance with GAAP, the government's reports must be comparable. So again, think about that as you're going throughout your career. Take a little bit of a swan dive into your government's AFR. The current financial reporting has been in place since 1999 with the issuance of statement number 34 from the GASB. That standard has been amended dozens of times due to the new types of transactions, different practices, policies, and procedures. I mean, there's not much that all of us in our daily lives have the same as we did back in 1999, and certainly the same as not in GAAP. I mentioned the ACFR a few seconds ago, so let's get a little bit deeper here. ACFRs are great, but they're not required unless by law or regulation. They add an introductory letter, organization charts, supplementary information, and statistical information. Now, both the ACFR and AFR, they have an auditor's report if they're audited. They have a management's discussion and analysis of the balances and results of the operations of government. And by the way, that's almost the same as for-profit businesses. The core question of the MD&A is why? Why did the balance change this year? Why are things different than last year? The basic financial statements are then presented, and again, I'm going to break these down in a few seconds. They're followed by the notes and required supplementary information required by GAAP. So within the financial section, the basic financial statements include a statement of net position and a statement of activities, much like a not-for-profit. Those are called the government-wide statements. The statement of activities has a different geography and elements, but again, similar statement to a not-for-profit. Both comprise, again, these government-wide financial statements. Both are prepared using full accrual accounting, economic resources measurement focus, full accrual, just like a gas station, unless the gas station prepares on a tax basis. Yes, it's just like a business or a not-for-profit, but remember, there are no shareholder transactions. But again, we got this word accountability. And because of this word accountability, we have these things called funds. And the governmental funds are the core operations of a general government. The reporting is currently based on what's called the current financial resources measurement focus and modified accrual basis of accounting. Now, the GASB may change this in the future along about 2025, maybe 2026, but for now, for these funds only, the reporting is like a government's budget, but adjusted for certain GAAP transactions. A balance sheet is prepared much like all those other organizations. The income statement is called the statement of revenues, expenditures, and changes in fund balance. And again, the word expenditures is used due to the different bases of accounting, and which is nearly cash in, cash out. And due to the different bases, we have to reconcile between those statements, the funds and the entity-wide financial statements. Additional fund statements are presented for proprietary funds. As the word proprietary means, these operations are kind of like a business. They are presented using the full accrual basis of accounting. Because they're like businesses, we have a statement of net position, statement of revenues, expenses, and changes in fund net position, much like a P&L, and we have a statement of cash flows. Now, the statement of cash flows is prepared on the direct method, but again, much like a for-profit or not-for-profit business. Finally, a government may have, again, these fiduciary activities, which include pensions, other employee benefit trust funds, investment trust funds, private trust funds, and custodial funds. In short, it's where a government is a trustee over somebody else's money. Now, these funds are not the government's money. These funds are presented full accrual with slightly different titles, but again, no statement of cash flows. Now, special purpose governments, we're talking about our airports or our colleges and universities and things like that, or a hospital, they have only one or a few activities. If they're like businesses, they present like proprietary funds. If they're like a fiduciary activity, they present like a fiduciary fund. Now, by the way, that bridge on the right, that's one of our clients. They are a classic special purpose government, including the bridge and the road structures leading up to the bridge. And if those folks are on the webinar, we love you as a client. Uh, I really always marvel at that picture. Now, I mentioned this word funds. Now, fund reporting is unique to a government. You know, the gas station, they don't care about funds. It's all one operation. Now, why is this unique to a government? Well, again, and we're going to delve into this a lot deeper come in October because we have this word accountability. Businesses and especially not for profits, they may have funds, but they're nowhere near as important as with governments, nor do they have a force of law or accountability. Now, governments have one fund that is the major fund. That is the general fund. And that's the focus. If you happen to be involved with the audit, either as a preparer or an auditor, that's where you're going to spend most of your time. You're going to spend most of your time preparing the general fund financial statements or auditing the general fund financial statements. Other funds are audited based on quantitative and qualitative measures. Each fund stands alone due to the phrase self-balancing within that definition. Yet there are often transactions between the funds, and the major funds have literally separate audits. And the smaller funds are audited together as an opinion unit. Now I'm going to discuss more on the funds coming up in October. The types of funds are on this sheet. Now, circle this one as it may assist you as part of preparing your AFR. And, you know, in some cases, you may want to print it out just in case you're adding or subtracting funds during the year. You know, for the auditors on the webinar, you're going to focus your time in, again, in these funds as well as on the government-wide financial statements. Now, notice that governmental funds are where the operations are really presented. And again, we may have a change coming up in 2025 or 2026, and there'll be more about that later on this year, or perhaps into next year in whatever webinars. It depends on how far the GASB goes. Now, within each fund type, there are diverse types of funds. And so, you know, again, there's going to be slight differences. Other governmental funds include these things called special revenue funds, which most governments use for grant activities. They have capital projects funds, which are used when a government acquires or constructs a capital asset. They have debt service funds if they're allowed to by law to pay, guess what, folks, debt service. They have permanent funds, which are like endowments. And again, we have proprietary funds, which operate much like a business, but we also have this different flavor of proprietary funds called internal service funds. And that's where we have central service costs that need to be allocated across government. And we're talking about technology, printing, legal, insurance, and so many things that are similar. And then we have these fiduciary funds. So because of these differences in funds, we need to go back to the concept of opinion units. The funds of the government are separate operations. Quantitatively and qualitatively, they're grouped between major funds and non-major funds. And because of the importance of the general fund, it's always a major fund. It always gets separately audited. So let's get that out of the way. Once we get that out of the way, we got to figure out, okay, what do we do with the rest of the funds that are out there? The other funds are based on math or judgment. And if the fund is over 10% of any of the elements, assets, liabilities, and so on, it could be a major fund. But we have to go through a further calculation involving not just the type of fund, but all the funds in the aggregate. So a government can say, hey, even though this fund is either major or non-major, we want to have this fund audited and have its own opinion unit. To which the auditors on the call say, hey, great, that gives us more work to do. Now, obviously, that adds more audit procedures, complexity, and reporting. So a government should let the auditor know that, gee, their legislative body really wants this one to be audited as part of audit planning. Now, all the funds are grouped together within these things called opinion units, but there's also this other concept called reporting units, which we'll talk about in a minute. Once the major and non-major fund units are known, then all the calculations are done for materiality and so on. And all this needs to be communicated as part of planning your annual financial report and planning your annual audit. This is one of the better exhibits in the AICPA's Auditing and Accounting Guide, State and Local Governments. I keep this one on my desktop because sometimes even I forget. And I've been involved with governmental accounting and auditing for over 3 decades, and I still have to refer back to this one. And it hasn't changed much in 3 decades. There are differences between reporting units and opinion units due to the component unit relationships. Remember those other entities that are so closely related to the government that we have to include them. So keep this one handy on this one. Notice that there will be differences between what the preparer reports, which is in the center of the screen, and what the auditor audits, which is in the lower part of the screen. And notice the level of aggregation. And in some cases, that level of aggregation results in one portion of the audit report rather than individual sections of the audit report. Individual sections of the audit report refer to the governmental activities, the business type activities, each major governmental fund and each major enterprise fund. All the other activities and categories are reported together as one. Even though there may be hundreds of those activities, they're just not material. Now, there are footnotes to this, of which there are a lot of those footnotes that are there. But remember, there are differences between the reporting and the auditing. And so whenever there's a question, pull this out as part of your career. Now that you're surprised, you can start to see that we're moving closer together. FASB and GASB, after all, are in the same building. And in fact, they use the same staff in many cases, which makes it hard to be a FASB or GASB staffer. Uh, but you'd be surprised how similar that they are, even though, one's for the gas station or one's for the church, and one is for your state local government. Both GASB and FASB, they have assets and liabilities. For GASB, inflows are revenues, outflows are expenses or expenditures. Kind of sounds like the gas station. Both use full accrual. Kind of similar there. We kind of learned that in Accounting 101. In both cases, debits are on the left, credits are on the right. Okay, kind of sounds the same. The differences are mainly in jargon. We have deferred outflows of resources in GASB instead of deferred charges. We have deferred inflows of resources instead of deferred revenue. Now, net position is used instead of equity because we don't have stockholders. And so clearly there's a lot more we're alike than we're different. The definitions are also similar in the accounting elements. If you compare FASB's definitions to the GASB, they're almost word for word. Again, they share a lot of staff. So of course they're going to be almost word for word. And of course we share auditing standards. Now let's go down a little bit further. Cash and investment accounting are almost identical. After all, investments are investments. Cash is cash, except for this one little thing. We have this thing in government called cash equivalents. They're really financial instruments that are so close to maturity, they have minimal risk. The government defines what a cash equivalent is. It's in policy or procedure. It's not in law or regulation. Most governments say anything that matures in less than 30 to 90 days, it's a cash equivalent because there's really minimal risk. Now, of course, that could be different these days because of inflation. But for the most part, hang on a second, I got something going off in my ear. For the most part, anything that matures in less than 30 to 90 days, it's really a cash equivalent. Now, receivables come in 4 different but common flavors. But guess what, folks? Endowments are almost exactly the same as what you see in a not-for-profit. Dividend and interest receivables are exactly the same. Where there may be differences usually involves this grant operation. Some grants are mandated and some grants are voluntary. The grants have differences in revenue recognition. And if the grant is mandated, meaning you got to do it, there could be some form of expenditure driven grant, meaning there needs to be a qualifying expenditure. Otherwise, you have to return funds to the grantor, likely the federal government, or there may be time constraints involved. If there's a need for qualifying expenditures, then funds received in advance really are liabilities, and much like deposits within banks. Now, if there are time requirements, meaning that funds cannot be spent until a current period, uh, if they're received in advance, the funds are reported in what's called a deferred inflow of resources until the period occurs. In all other situations, the funds and transactions are recorded exactly the same as FASB. So again, revenue recognition is slightly different, mainly based on whether or not there is a constraint on time or whether or not there is a need on qualifying expenditures. If there's a need on qualifying expenditures, you got to declare a liability if you have the cash already, because if you're disqualified on those expenditures, you have to return the money. Now, if there's time constraints, you gotta live within those time constraints. Capital asset transactions, those are just like the FASB. We even have this thing called depreciation. However, the purchase or construction of those assets may have accounting or financial reporting in governmental funds. The capital outlays are based on the modified accrual basis of accounting. Now, since the fund doesn't report the capital asset in governmental funds, it's only capital assets are only reported in proprietary funds because they're just like a business and they're reported on government-wide financial statements. We needed a transaction in the governmental funds to report capital spending, and we call that capital outlay. Even depreciation and the amortization must occur just like a FASB entity. Now, many capital asset types are just like the FASB entity. We have copiers, we have buildings, we have land, we have all these are valued at historical cost. But there's one major difference. Governments have large values of horizontal infrastructure assets. We have roads, bridges, tunnels, water, sewer, dams, canals, lighting. Uh, these are assets. Governments either depreciate these values or to maintain those values, they are required to report them as required supplementary information. They essentially maintain an even balance, but show how much they spend to maintain them. Think about that the next time you drive over a bridge. There's one outside my window that's over 100 years old. For the liabilities, nearly every liability of a government is the same as a FASB entity. However, most FASB entities don't have defined benefit, pension, or OPEB plans for retirees. Remember, though, deferred inflows of resources are not deferred revenue, but that's mainly jargon. We got to answer these annoying opinion units and the different bases of accounting. And we got to address that, for these governmental funds, because guess what, folks? That's where the bulk of our activity is. There's going to be some differences. Now, given that capital assets are not presented in governmental funds, it's just a capital outlay, meaning an expenditure, an outflow of funds. That needs to be reconciled to an increase in a capital asset. Now, the opposite is true when we go into debt. When a government sells a bond, the debit is to cash, the credit is, guess what, folks? And I hope you're sitting down. The credit is to an other financing source, which is a revenue entry. Amazing. We think that bonds are revenue in a governmental fund. And this is due to the almost cash in, cash out nature of the current financial resources measurement focus and modified accrual basis of accounting. Most liabilities in governmental funds are not recognized, especially if they're to be paid, say, after 60 days beyond the end of a fiscal year. Now, that 60 days is not uniform. Some states accrue for 1 year due to Medicaid, but by and large, 60 days is the cutoff for most local governments. Now, some governments also have risks that are not seen in other entities. Governments tend to be the payers of last resort when disaster strikes. They say, wait a second, we got a flood, you got to bail us out, or hurricane or fire or whatever, and other natural disasters. Now, nearly all these risks may be accrued in a government. Governments may finance these risks, and recently the Federal Infrastructure and Investment Act provided significant funds for some of these risks, especially natural disasters relating to climate change. Now, due to the size of these risks, governments do not go to their local insurance broker and ask for insurance. I mean, nobody's insuring the city of Miami Beach, even though it is flood prone in that respect. And nobody's really insuring against cyber insurance these days. A lot of governments, they do what's called self-insurance. Now, that means that there's a pool of funds set aside to fund these claims well into the future. Now, sometimes the pool is funded and other times it is not. But in a lot of cases, there's no such thing as insurance to finance risk in a government. They use a pool of funds to finance those future costs. Okay, I mentioned these things called deferred outflows of resources and deferred inflows of resources. These are not deferred charges and deferred revenues. Now, that said, to be recognized, they got to be identified in a GASB standard. Under current GAAP, there are 5 types of transactions that may result in a deferred outflow and 6 types of transactions that may result in a deferred inflow. Now, there are dozens of types of transactions for FASB entities that result in deferred charges or deferred revenues. Most deferred inflows and most deferred outflows for a government have nothing to do with real current operations. They have to do with hedging derivative instruments, pensions, post-employment benefits other than pensions, mainly retiree health care, asset retirement, and grant transaction, and in some cases tax transactions. But they're not part of your day-to-day operations in a lot of respects. They're really all that they are is listed on the screen. Finally, net position is just like the FASB, but for not-for-profits. There are 3 categories as opposed to 2 for not-for-profits. The third category is called the net investment in capital assets. And this was established due to the nature of capital asset accounting and debt accounting in most state and local governments. Governmental fund statements have 5 categories for fund balance, again, largely due to these funds operations. And we'll talk about these not only a little bit later this hour, but certainly in October. The statement of activities is organized much like the federal government's flow statements. As I mentioned earlier in the webinar, it has slightly different geography. On the left-hand side, after identifying the program, and you can imagine in your mind's eye, it'll say general government, public safety, public education, culture and recreation, whatever you want it to say on the left-hand side, that's your expense. That expense is offset by various forms of revenue that is specific to that program. Other general revenue then offsets the net cost of those programs. And that general revenue is things like taxation, investment revenues, and transfers. The goal of this format was to show the net cost of operating the government. Other fund statement P&Ls are just like not-for-profit GAAP. The statement of cash flows is also just like the FASB, but it's also included only for proprietary funds, and it's only prepared using the direct method, which many software providers have built in. So the direct method is, okay, show me all your outflows to vendors, show me all your outflows for payroll, and so on, and show me all your inflows from investments in cash. And that's a direct method statement of cash flows. In many modern software packages, it's almost push button. The MD&A is pretty much like a publicly traded company's MD&A. The significant difference in the financial report is the notes to the basic financial statements. Now, this is where a lot of people get upset. In some cases, notes can stretch 100 pages, but they really don't need to. For some governments, they can be overly detailed and go beyond what the GASB requires. And whenever I review a set of notes, especially this time of year, you'll see a lot of red X's because they're just not needed in some cases. The GASB, though, is looking at codifying changes, potentially streamlining the note disclosure process. But yeah, I got to tell you, folks, before you take that one to the bank, I may be retired by the time we may see a potential change. The required supplementary information is unique to the GASB, and mainly it includes budget to actual statements and analysis and pension and post-employment benefit trend analysis, and then notes to the required supplementary information. The revenues and expenses for most of the financial statements are based on the full accrual basis of accounting. There are only a handful of differences between the FASB and GASB here, and primarily that, the netting of unrealized gains and losses that are not in the face of the financial statements. Those are part of your investment value and investment revenue. And then we have those deferred positions. But by and large, pretty much the same as FASB GAAP. So hopefully you're taking a little bit of a breath and saying, gee, this is a little bit better than I thought. And the answer is absolutely true. Here's what we learned today, that governments are different and they should be. Governmental accounting, financial reporting, and auditing is based on a set of laws, regulations, contracts. And if you think about that in comparison to your gas station or your local not for profit, where you may be volunteering, say, your religious organization or Red Cross, or in my case, I do a lot of volunteer work for the AGA, Association of Government Accountants. There's going to be, a slight difference between not-for-profit, for-profit, and governments. Full accrual accounting is used for a huge chunk of our real estate in your annual financial report. And it includes our government-wide financial statements, but not and our proprietary fund financial statements and our fiduciary fund financial statements, but it's not used for our governmental financial statements within a state and local government. The government environment, it's far different than our for-profits and our not-for-profits because of one word: accountability. That's it. And think about that. If you open your newspaper, if you look on your Twitter feed, which I don't have Twitter and personally I don't like it at all. If you look on it, it's all about somebody's semblance of accountability. And in many ways, if you're looking at a government, be it your local government, your state government, your federal government, it's all about accountability. And hold us as citizens holding other folks in government accountable. All of us are the stakeholders of government at all levels: federal, state, and local. It's really all of our money. And as such, we're all stakeholders in its success or failure. It's not just looking at the open checkbook and looking back and seeing what, somebody got paid as a salary, which many governments post, including my government used to post it, and they still do. And yeah, when I was working for a government, could you see what I made? Sure. It's because it's public information. We're stakeholders of that government. After all, we care about the condition of our roads, the condition of our schools, and so on. We care about our federal government, and it's all about this one word: accountability. Okay, next month, and this is coming up in October, we're going to delve a little deeper into funds and fund accounting and the importance of those audits. And of course, we're going to talk about the single audit in a little bit more detail. So before we wrap up, do we have any questions? Okay, so let's see. Could you share the link to that 20-page financial? What I'm going to do is I'm going to send it over to Amy. It's on the US Treasury's website, and it's called the Citizens Report of the United States. and it is really, really something. I know the gentleman who prepares it, and he really takes a lot of pride in it. His name is Robert Scott Bell, and he's been doing it for about 15 years. And it really is something that every citizen should know. And it shows how much your federal deficit is, and it shows, how much your assets and liabilities are, because guess what, folks? It's all our money. Now, here it says with GASB 87, um, there one more category of deferred inflow or outflows or resources for less lease receivables for lessors? Absolutely. And I did not count that in there because again, we're walking before we're running. We're assuming you did not that most of our folks are brand new to government, which is true. That most folks on the webinar today were brand new to government, be it an auditor or as an accountant. Now it says, I'll admit I'm still working with 630 fiscal year in an Excel. I hit escape to get out of a formula right when the box popped up. Well, guess what? A lot of financial reports are still written in Excel, and I think the government, a lot of governments that I work with are still using Excel and Microsoft Word. I'll give you a hint. When I started off working, my first audit well over 30 years ago, the bookkeeper used a quill pen, and I am not kidding, and used a handwritten ledger. And if she made a mistake, she ripped out the page. And this was in a small town in Massachusetts. And when I saw her ripping out a page, I said, "What are you doing?" And she says, "Oh, I do not want to make a mistake." And I said, "Well, wait a second. I got to keep that piece of paper just in case you change the numbers." And she never realized that she could be committing fraud. And so Excel's a little bit better than the quill pen, but we know that Excel is not always perfect, and certainly not while you're watching a webinar. Now, somebody asked, who wrote the publication? It said he wrote a book or publication like the Blue Book. What I write are two volumes. One is called the Governmental Gap Guide. It's available from Commerce Clearinghouse, CCH Wolters Kluwer. And then the other one is the newly combined governmental practice manual that goes through a whole host of debits and credits, hundreds of them, and also does a complete set of footnotes that nearly every footnote you could possibly have. There's an electronic version of that on CCH's service called Accounting Research Manager. And in the note disclosure, you can literally copy and paste. Would I recommend you to do that? Well, yeah, as a framework, but remember your government is different than the underlying government that may be used for the note disclosure. So by all means, check those out, and certainly, we thank you. Are there any good third-party products that help governments with preparing an ACFR? I personally am not I don't like to recommend one versus another because obviously there's a fiscal impact on there. However, I do see a number of different types of packages. There's a great one out by Oracle that keeps things on the cloud, and it really is phenomenal, and it does help out. There's another great one by Tyler Technologies. It used to be called Socrata. It also used to be called Munis. And it's, again, great for things like Open Checkbook and so on, but it also helps prepare an ACFR. And there's a third one that I use in nearly every client, or clients have it. It's called Workiva. Now, there are many, many other packages that are out there, but certainly I wouldn't recommend one versus another. However, if you do want to implement those packages, we can certainly help you out with that, and help you choose what fits best for your government. So with that, let's see, any other in the chat? Let's see, Amy, anything else?
No, we are good.
All right. So with that, I'd like to, thank you all for taking the time today. I pretty much stuck the landing. I actually went about 10 minutes over. We're always supposed to go actually an hour and 40 minutes. I went 10 minutes over. And we'll see you in October. And again, in October, we're going to talk about funds, auditing, and the single audit. And with that, everybody, I hope you have a good afternoon and happy autumnal equinox coming up soon. Talk to you soon.
Awesome. Thank you so much, Eric. Thank you all so much for attending. Enjoy some time back in your day, and we'll talk to you soon. Have a good one.